Guys, I want to welcome you back to my channel, and in this video we're going to talk about order block patterns, how to identify them in the market, what they mean, and how to be more efficient when you kind of see them. That way they can actually help you take better trades and look at the market in a different way. So usually when I look at order blocks, there are usually 6 different patterns that I actually look for in the market to kind of capitalize off of. So one of the things I want you guys to notice is most of these patterns that you see are patterns that you may have learned from Japanese candlesticks. Like, for example, you have the bullish engulfing pattern, a bearish engulfing pattern, you know, morning star, evening star, things like that. But I'm going to explain to you guys how to trade these and how to find the base area for each order block. So for example, let's take a look at the first pattern, which is the bullish engulfing order block. So the way that you actually mark this up is, for example, you have what is identified as the base area of an order block pattern. So in this particular example, you want to take it from the top of this red wick down to the candlestick at the bottom. Let's actually change the color of this to light gray with no border. Okay. So this section here is considered as your order block base. And so, like I said, within this pattern, you want to start from the top of this candle and down to the wick. And so the way that this pattern actually works is price will impulse from this base, it'll come back to retest, and then it'll shoot out. Now, one of the things I want you guys to understand, most retail traders, they've probably been taught with Japanese candlesticks or this particular pattern to buy when you've gotten this bullish engulfing. But what some people don't realize is that this pattern here is actually a break of structure on a lower time frame. And so let me kind of break that down to you and kind of explain what I'm talking about. Price will start from this wick, price will open, and it'll come down to the bottom of this wick. And then from there, price will impulse up to the base area here. Price will open here and go down, which is that wick that you see right here on the green candle. And then price will create a new high. Now, basically, when you see this in the market, what this does is it creates a break of structure, because on a lower time frame, it actually broke this structure here. Now, what does price have to do once you see this in the market? It has to retest somewhere in this area before it shoots back up, which creates that higher low, higher high type of situation. So when you see this pattern, like I said, most retail traders, they're trained to buy off the high. So that kind of goes against everything that we've taught to buy, to sell high and buy low. So when you see this type of pattern, you want to wait for a retest to come back into this base area. Okay, so let's look at some other patterns. So when you're looking at the bearish engulfing order block, the base and how you would mark this up, you would go from the bottom of this candle here up to this wick, and you will mark your base, your order block base, in this fashion here. Okay, so this will be the level. Price will come back to retest before it continues down. Now, in these two patterns here, these are continuation order blocks. And so in this one, which is the bullish, bearish, bullish, and how you will actually find a base, you will use the middle candle. So whatever direction that it's going, so for example, that you can see bullish, bearish, bullish, means it's a continuation to go up. So what you would do, you would take the middle candle from the top of the base down to the wick, and you will mark your base zone here. That way it's a continuation for price to continue on its upward leg of structure, come down and retest. This pattern here, you will actually do the opposite, which is a bearish, bullish, bearish. So you will take it from the bottom of this candle here up to the wick, and you will mark it here. Price will usually continues to the downside, come back to retest, and then continue on with this leg of structure. Now, these particular patterns here, the morning star order block and the evening star order block, they're a little bit different to notate and things like that, but usually it starts at the bottom of an impulse leg of structure. So for example, let's just say if price was coming down and it came down here, and then it's at the bottom of this structure. You notice that this structure is going up. So that's how you would actually find this. So to mark up the base for this, you would actually just utilize this candle here and mark your base up like that. But for me, whenever I mark it up, I usually just cover both candles. That way I can simplify it and just make it easier. It's pretty much almost looking like the opposite of the bearish and the bullish engulfing order block pattern. And in this example here, you actually mark it up the opposite. You take the top of this wick down to the base, but like I said, for me, I usually cover that candle as well. You wait for price to push away, come back and retest, and then continue it on. So now you guys, like I said, these are the 6 order block patterns that I usually trade within the market. So now let's actually go over to the charts. That way we can look at a couple of examples and actually identify these. So we're over here on AU, and let's go to the 4-hour time frame. Okay, you guys, so right off the bat, just kind of looking at this, as you can see, I noticed a couple of order block patterns right off the bat. So if we look at this one here, we have a bearish, bullish, bearish, mark from the bottom to the top of this area here, and we pull it over. As we can see, price pushed away, came back to test this order block. But like I said, this is a continuation pattern. And as you can see, you have a high here, price came down, created this order block, and price continued on down. Price came back to retest this area, then it broke this area and went down to create a new low. Let's look at another one. This one here. This is your bullish engulfing order block. Here, you will mark it here. As you can see, price, let's make this a little bigger. Price shot away. Actually, before it price opened here, came back to retest, shot away. Price actually came back to retest the base area here before it kind of continued on up. Let's find some others. Here's another one, bullish engulfing here. Price pushed away, came back to test the base, tested the base actually another time before it actually continued on. All right, from here, we can see we have another order block here. Price pushed away, created another continuation order block, which is a bullish, bearish, bullish before it actually continued. Price impulsed to actually make a new high, came back, tested the base before it continued on. Okay, let's find some others. And as you can see, when price pushed away, it started creating bullish order blocks, bullish, bearish, bullish, bullish, bearish, bullish, before it actually stopped here and continued on down. Now in this area, we can look at this as an order block as well. We can look at this, take it from the bottom, even though it's small, up to this area here. And let's see if we have some respect in this area. As you can see, if we pull it over, price didn't necessarily come all the way to this area, but as you can see, we had this order block here. Price pushed away, creating more bearish order blocks, and price eventually came back to retest, but it didn't come all the way back. Now, the reason that it didn't come all the way back is because if you look over here, we have a level of inefficiency, and this is something that we'll teach in another video as well. But price came back to this level of supply, which is this order block here, before it actually pushed away. Let's look at another example. We can look at this example here. We have a bearish, bullish, bearish. Mark up this area here. You can see price broke away, came back to retest before it actually shot away. So you guys, I hope these type of examples help you guys in the market to kind of identify and locate order blocks within the market. These are the patterns that I look for every single day, and I take entries and trades. And these patterns you can see on every single time frame, not just a 4-hour time frame. So as far as for me, I look for order blocks to confirm entries on 1 minute, 5 minute, 15 minute. It don't matter which time frame it's on. There are order blocks that correlate on every single time frame. So in the next video, we'll talk about order block correlation and time frame correlation, and how you can actually see order blocks on different time frames and how they actually relate to each other. Hey, you guys, I want to thank you for watching, and I'll see you guys in the next video.